Pantheon AI presents NVIDIA China crisis. India tariffs double plus $12 billion. Thoma Bravo deal shocks market. Welcome to the PAI morning briefing. It's August 21st, 2025, and I'm John.
And I'm Sarah. Good morning, everyone. Hopefully you've got that coffee brewing and you're ready to dive into the markets with us.
Absolutely. Let's kick things off with a quick look at the numbers. The S&P 500 is sitting around 65.5. That's down just under 0.25%. The Dow is also down slightly, about 0.5%, near 44,717.
Right, and the Nasdaq is following that trend, trading around 21,082, which is a small slip of about 0.1%. In crypto, Bitcoin is at about 112,800, and Ethereum is near 4252, both seeing some downward movement as well.
But here's the interesting part, Sarah. Amid all that red, the Russell 2000 is actually a bright spot. It's trading around 2,270, and it's up by almost 0.5%.
That is interesting. So, John, what's the big picture here? What story are all these numbers telling us this morning?
Well, it really points to a phase of cautious adjustment. Investors are weighing their options, balancing safe havens against growth potential. It's that classic tension between risk and reward playing out in real time.
I like that. And I also like your note here about market volatility being like a comedian's punchline. You know it's coming, which is almost comforting in a weird way.
Exactly. Who knew finance could have a sense of humor? So diving a bit deeper, we've seen this slight but persistent pullback in the big blue chip indices for a few weeks now.
And that's being driven mostly by global uncertainties, right? Things like geopolitical tensions and shifts in monetary policy.
You got it. But what's fascinating is that while some investors are sticking to old narratives, others are starting to price in a potential rebound. It's like they're waiting for a comeback in a big sports game.
And that brings us back to the Russell 2000's gain. It seems like there's a real shift in sentiment toward these smaller companies. It's a story of resilience, not just numbers. The classic underdog surprising everyone.
It really is. Speaking of big stories, let's talk about NVIDIA. The debate on Wall Street about their potential sales challenges in China is just intense.
It's a huge deal. So you have one side arguing that China has already de-risked its supply chain and might not even need American tech, while the other side insists NVIDIA is facing an impossible situation with billions on the line. It's high-stakes geopolitical chess.
Exactly. And it makes you wonder, are we watching a major decoupling between East and West, or is this just another chapter in a long story where global tech giants find a new way to work together?
That's the multi-billion-dollar question. And adding to that geopolitical flavor, we have this news out of India. Trade advisor Peter Navarro is talking about doubling tariffs on India as early as August 27th.
And he's not mincing words. He called India a laundromat for the Kremlin. Now, that's some pretty charged language.
Wow, yeah, that's definitely adding fuel to the fire. So we're looking at higher costs, strained supply chains, and a big impact on investor sentiment in emerging markets.
Meanwhile, back here at home, there's some good news. The U.S. economy seems to be getting its mojo back. S&P surveys of business leaders suggest August has been one of the best months this year.
But there's a catch, isn't there? This optimism is paired with a modest uptick in inflation. It's this interesting dichotomy. Are we on the road to a real recovery? Or is this just a temporary high before inflation control kicks in?
That's the puzzle policymakers are trying to solve. Now, shifting to a major corporate story, let's talk about Dayforce, the HR software company. Its stock dropped over 25% this year. But now, Thoma Bravo is stepping in with a huge $12 billion take-private deal.
That's a massive vote of confidence. It's like Thoma Bravo is looking past the recent dip and seeing the long-term potential of very bold play in a pretty choppy market.
Definitely a bold play. And in other tech news, Crusoe has acquired Atero. Crusoe is known as the first vertically integrated AI infrastructure provider, and this move is set to really boost their Crusoe cloud performance.
And they're also setting up their first office in the Middle East. This isn't just about geography. It's a strategic move that shows how critical things like GPU management are becoming as the AI revolution charges ahead. It's like they're upgrading from a bicycle to a bullet train in the computing world.
Great analogy. And the big deals don't stop there. Blackstone just announced it's acquiring Shermco, a major electrical equipment services provider, for about $1.6 billion.
Right, and this feels like part of that broader trend where Private equity is swooping in on companies with strong fundamentals, but maybe an undervalued stock price. Blackstone is looking to unlock hidden value there.
It's a classic financial play. And while we're on acquisitions, we should also mention Gilead's Kite buying Interius Biotherapeutics for around $350 million. It's another example of a big pharma company snapping up innovation to stay ahead.
Absolutely. It shows that behind every deal, there's a story of strategy and risk-taking. But not everyone is on solid ground. What's the latest with Spirit Airlines, John?
Well, they're on pretty shaky ground, Sarah. Despite avoiding bankruptcy for now, there are serious concerns about whether they can survive a year without a new cash injection. It really highlights the razor-thin margins in the airline industry.
It's such a tough business. And turning to the labor market, we're seeing jobless claims hit a 2-month high. But interestingly, there's no big spike in layoffs to go with it.
It's a strange signal, isn't it? It seems like businesses are just being very, very cautious. They're adjusting their workforce slowly rather than making drastic cuts. It's a delicate dance.
It really is. And to add another layer of complexity, we're seeing billionaire family offices, like Leon Cooperman's, making some really agile moves, repositioning their portfolios amidst all this tariff turmoil. It's like a high-stakes poker game where they're betting on sectors others are overlooking.
So let's pull all of this together in sector analysis. In tech, that NVIDIA story really sums it up. It's not just about coding anymore. It's about navigating a geopolitical minefield. Diversification and adaptability are everything.
And in energy, it's all about the transformation. Traditional companies are pivoting to renewables. It's like watching the old guard pass the baton to a younger, more agile generation. There might be some missteps, but the long-term trend is clear.
Then in finance, as we saw with Blackstone, consolidation is the name of the game. They're looking for those untapped synergies. For investors, that means you really have to dig into the balance sheets because the devil is always in the details.
And globally, all of these stories are interconnected. What happens with U.S. tech in China affects markets in Asia. Economic recovery in Europe has ripple effects. It really underscores how a decision made halfway across the world can impact your portfolio right here at home.
So what are the experts saying to do? The consensus seems to be, stay agile. Short-term volatility is likely to stick around, but long-term positions should be built on solid fundamentals, companies with strong balance sheets and clear vision.
Right, and be ready to pivot. I love the analogy of navigating a grand international buffet. You have your main course of investments, but you have to be willing to try something new that might just be the perfect complement.
It's funny you mention that, because financial news really can feel like a soap opera sometimes, can't it? You've got Mr. Blue Chip, the charming protagonist, then the villain of geopolitical risk shows up.
And just when you think the plot can't thicken, the quirky small-cap stock comes in and steals the show with an unexpected surge. It's a blockbuster, complete with cliffhangers every quarter.
Exactly. And a little humor helps. If you can laugh at a market correction, you're already winning. So to recap the key takeaways for today, we've got a modest pullback in the major indices, but some bright spots, like the Russell 2000.
And we have these major headline stories. NVIDIA in China, the India tariffs, big acquisitions by Thoma Bravo and Blackstone, all reshaping the landscape. The big message is to balance that optimism with a healthy dose of caution.
That's the perfect summary. And remember, our mission here at Pantheon AI is to be your information co-pilot, helping you navigate this fascinating world. We'll be back tomorrow with more.
Before we go, we want to leave you with a few questions to think about. How are these geopolitical tensions impacting your investment strategy? And where do you see the biggest growth opportunities? In AI, renewables, or somewhere else?
Great questions. So what will your next move be? A calculated risk or playing it safe? It's something we should all be thinking about. Thank you for joining us today.
Until tomorrow, stay informed, stay curious, and have a great day of insightful decision-making. Pantheon AI, your information co-pilot.
Because learning shouldn't feel like a full-time job. Take care and see you next time.